Proposition 45, Healthcare Insurance, Rate Changes, Initiative Statute. Plain language, empower the California Insurance Commissioner to approve changes in health insurance premiums and benefits. What does it do? It makes it so that whenever an insurance company wants to change its health insurance rates, they must provide information about why they want to do so to the California Insurance Commissioner, and they must provide a sworn statement verifying that all the information they provide is correct. It then requires that the Insurance Commissioner approve or deny these rate changes. It allows public notices and hearings about all health insurance rate changes. It allows the public to appeal an insurance commissioner's rulings if they don't like it. It makes it illegal for automobile, homeowners, and health insurance companies to accept or reject customers based on their credit history or whether or not they've had insurance in the past. Special note, companies that insure more than 50 employees would be exempt from Prop 45. Long story short, currently, anytime auto insurance companies or homeowners insurance companies want to change their rates, they must get it approved by the insurance commissioner. Prop 45 would expand this to include health insurance now that America has started implementing universal health care. This law would operate retroactively and include plans from November 6, 2012 onward. It's possible that some customers could receive refunds if the commissioner rules that they were overcharged. Fiscal impact. The fiscal impact of Prop 45 would be a cost in the low millions due to the increased administrative costs of having the state review all health insurance plans and costs. These expenses would be covered by fees charged to health insurance companies. From Yes on Prop 45. Prop 45 will stop excessive health insurance rate hikes. Even when premium increases are found to be unreasonable, no one in California has the power to stop them. That's why California recently faced $250 million in rate hikes that regulators found to be unreasonable but could not stop. Prop 45 requires health insurance companies to open their books and publicly justify their rate hikes, under penalty of perjury. When California began requiring auto insurance companies to get their rates approved by the state, we saw California become the only state in the union to have insurance rates go down in the last 2 decades, saving Californians $102 billion. Prop 45 could save Californians $200 million per year in the same way, according to a nationally recognized actuary. Unaffordable insurance leads to unpaid medical bills, and that is a leading cause of personal bankruptcy. 40% of Californians skip doctor visits or recommended care due to the cost. 5 insurance companies that control 88% of the market have already contributed $25.4 million to stop Prop 45. Let's join the other 36 states that have authority to control health insurance rate hikes. When did insurance companies ever pay $25 million to make your health care better? There is no commission in California or federally that has the power to stop unreasonable health insurance rates. That's why we need Prop 45. Moreover, no insurance commissioner has accepted campaign contributions from insurance companies since 2000. No wonder health insurers are worried. Now that we're all required to have health insurance, we need Prop 45 more than ever. Prop 45 won't create a new bureaucracy. It requires that health insurance companies follow the rules that auto and homeowners insurance companies follow. Insurance companies fear these rules and the consumer challenges to excessive rates that have canceled billions in overcharges by auto, home, and business insurers. No on Prop 45. Prop 45 will make things worse, not better. Prop 45 isn't about controlling healthcare rates. It's about a power grab. California already has a new independent commission responsible for controlling healthcare rates and expanding coverage. Prop 45 takes power away from this independent commission and gives it to one Sacramento politician who can take campaign contributions from special interests like insurance companies and trial lawyers. This flawed and deceptive initiative would sabotage the existing independent commission and result in bureaucratic conflicts, lengthy delays, and higher costs for consumers. Increased state administration costs tens of millions of dollars in duplicative bureaucracy and legal messes. The sponsors of Prop 45 are lawyers who made $11 million in legal fees on the last proposition they sponsored. They hid similar provisions of Prop 45 to allow for frivolous lawsuits, and they charged $675 an hour to do so. Now they're back to make more with this one. Prop 45 exempts big corporations while burdening small businesses with costly new regulations and bureaucracy. If we're going to reform healthcare, it should apply to everyone, not just the small businesses and individuals. Our healthcare system is too complex to make major changes through a proposition pushed by one special interest. If we're going to make changes, patients, doctors, and hospitals should all be a part of the solution. The bad news is that this is such a large, complex, bureaucratic, messy, twisted, convoluted issue that who can really be sure what the effects of enacting Prop 45 will or won't be? The good news is that we have already seen a version of this in place with auto insurance and homeowners insurance, so we at least know it won't be the end of the world. Some things that stick out to me: large group insurance, or insurance plans at companies with more than 50 employees, are all exempt from this law. Why? Large group insurance consists of 40% of insured people. When I contacted the Yes on 45 campaign, they informed me that the large insurance companies have actually got a political lockdown on this issue, so they were not able to include them. Their goal is to start small with this and then open the door wider as they get political clout. So there you go. Next, it's true that all this new healthcare legislation is really constricting profits from many medical organizations, and it's causing many to leave the industry and stop innovating. We want cheap healthcare now, yes, but we can't forget that America has been the world savior in the area of healthcare, and we can't ignore that part of that has been that profit inspires innovation. On the flip side, we are all now legally required to participate in the health insurance game, so while we should still encourage profitable innovation, we can't be forced into a system only to be gouged by hostage pricing. Furthermore, I acknowledge that we are all now required by law to have this health insurance, so since the government got involved in requiring it, perhaps they should also be in charge of controlling the rates. So in my mind, it all comes down to this: do you trust the commissioner to balance the necessary profit from medical companies with Californians' need for affordable insurance? That's what this is about. Do you trust the insurance commissioner, whoever he or she may be, to regulate the ideal rates for everybody? I am generally hesitant about these kinds of one-person centralized power systems, and even now I'm not 100% sold on either side. But for now, because of the success we've seen with auto insurance regulation, I'll give a hesitant yes on Prop 45. And just for additional clarification, you see both sides arguing about whether there's already an independent commission in place and yada yada yada. I believe they're arguing about the Department of Managed Healthcare, which has the authority to review rates, issue opinions on them, and report them, but they don't actually have the power to approve or deny them. So that's the confusion there. Yes, there is a commission, but no, technically they can't approve or deny anything. A yes on Prop 45 will allow the insurance commissioner to regulate health insurance rates and make it illegal for insurance rates to be based on credit history or insurance history. With a no vote, nothing changes. The Daryl Johnson Show says yes on Prop 45.